If you're watching this video, you're probably considering a move to Sarasota from somewhere like New York, New Jersey, California, or Illinois, and you've heard Sarasota is now expensive. Here's the truth. Sarasota is no longer a cheap alternative to your current market, but it is a strategic financial move. The median home price in Sarasota hit $474,700 in 25, down 6% from 2004's peak. That's not affordable in absolute terms, but when you factor in zero state income tax, declining insurance costs, and the quality of life premium, the math completely changes. I'm Darren Dowling with Beyond Realty, and I've helped dozens of families relocate from high tax state to Southwest Florida. Let me show you the actual numbers you need to know for 2026. Let's run a real scenario. You're a couple in your early 60s, household income of $250,000, considering a move from Westchester County, New York to Lakewood Ranch. In New York, state income tax on $250K is around $17,000 a year. Property tax on an $800K home, around $18,000 a year, and a total annual tax burden of probably over $35,000. Let's compare that to Lakewood Ranch. State income tax, zero. Property tax on a $600K home's around $9,000 with a total tax burden of $9,000. So your tax savings right there in that example is about $26,000 per year over 10 years of retirement. That's $260,000 in your pocket instead of the government's coffers. That saving alone could fund a 20% down payment on a Sarasota home. Not all Sarasota areas are created equal, so here's your breakdown by lifestyle and budget. First off, let's start with Lakewood Ranch, a master planned family-focused community where the median single-family homes are ranging from around $600,000 to $700,000, HOAs from $200 to $400 a month, lower insurance because it's not in a flood zone and it's new construction, and it's best for families, active adults, and those buyers specifically looking for new construction homes. Now let's cover west of Trail, a historic Sarasota location with a walkable lifestyle. Now, you're not really going to get into much less than anything around $1.5 million, and it goes up from there. Why is this? It's walkable to downtown, close to beaches. The insurance is higher because some of these homes are older and you're close to the water, so there is a flood zone, but it's best for the lifestyle buyers of empty nesters who value walkability, being close to a hospital, and everything that's happening in town. So there's Wellen Park, the fastest growing part of the South County. Median prices there are going to be around $450 to $650 when you're comparing villas and single family homes. There are obviously lower price point homes and there are higher price point homes. All brand new construction, modern amenities, and HOAs around $150 to $350 on average. Best value really for you value focused buyers, young families, and price conscious relocators. Each of these communities offers something different. The question isn't which is cheapest, it's what aligns with your lifestyle 10 years from now. With mortgage rates settling around 6%, you might be thinking, should I rent for a year? Here's what's happening in Sarasota's rental market. Single family home rents are ranging between $2,800 to $4,500 a month. Condo rentals are $2,200 to $3,500 a month. Inventory is tight for quality properties. So let's just say if you're paying $3,500 a month in rent, that's $42,000 a year. You're building zero equity and subject to annual rent increases. Compare that to buying a $550,000 home. With 20% down, that's $110,000. A monthly payment at 6% for 30 years, $2,640 with principal plus interest. Added taxes, insurance, HOA, your total's going to be around $3,800 a month. You're paying an extra $300 a month, but you're building equity in a hard asset. You're locking in your housing costs, getting the homestead tax exemption, and benefiting if rates drop from a refinancing opportunity. So let's address the elephant in the room, hurricanes and insurance. Yes, Florida had a devastating hurricane season between 22 and 24, but here's what's changed. Insurance stabilization. Citizens are cutting their insurance rates by 8.7% on average. Private insurers like Florida Peninsula, Security First are offering competitive rates, and 17 new companies have entered the Florida market last year. Tort reform eliminated frivolous lawsuits that drove up premiums. So let's cover the building code reality. Homes built after 2002, we're talking hurricane impact windows and reinforced construction. New construction in Lakewood Ranch and Wellen Park. Those homes are built to withstand 150 plus mile-an-hour winds. Flood insurance, it's required in certain zones, but prices, again, they're slowly stabilizing. If you're buying a post-2010 home in flood zone X, which is your lowest flood risk, your insurance is likely $2,000 to $3,500 a year, far less than the horror stories you've heard. So, moving to Sarasota in 2026 is a strategic financial decision, not an emotional one. The tax savings alone can offset your entire housing cost increase. And as a reminder, my name's Darren Dowling with Beyond Realty, and I specialize in helping buyers relocate from high tax states to find the perfect Sarasota or Lakewood Ranch area home. So let's build your custom relocation plan. Reach out to me to set up a Zoom or meet in person over coffee. And if you did like this video, you found it valuable, don't forget to like, share, and subscribe. Even throw in a comment below. It means the world to me.